all comes back to foresight, right? If you got the right teams together more effectively to think about what ifs and scenario planned around what ifs, and then actually pulled together the relevant data, imagination, whatever, around those what ifs, then you're in a much better position to be able to respond more effectively. To my mind, it should have been on everyone's radar that there was a possibility that demand could have dried up after 2 years of lockdown. It should have been a scenario.
Thank you for joining me today. My name is Gary Newbury. I'm an award-winning strategic advisor and delivery executive. I'm focused on the rapid transformation of disrupted supply chain performance across the make, move, sell flow of consumer products and services from production to porch and assembly floor to shelf. My purpose is to inspire business leaders, particularly those within the consumer products and retailing space, to think big, be bold, scale, adapt, and win, one epic supply chain transformation at a time. There's additional content available from my website, RetailAID.ca, or on my YouTube channel, RetailAID. Be sure to check these out. As the business world faces significant volatility, uncertainty, complexity, and ambiguity, business leaders looking to drive market-leading performance need to be tapping into thought leaders, strategic advisors, and implementation executives who have mastery of operational turnarounds and strategic transformations, together with a strong track record of transitioning enterprises to become more agile, innovative, and digital. There's great material to get through here, so let's get started. Good day, everybody. I've got Liza, Carl, Roslyn, and Jeff joining me today on the podcast. We're going to be talking about an interesting development that's occurred as a result, I guess, of the pandemic. So I'd just like to ask everybody just to give a quick one-liner introduction to themselves before we get started on today's chat. Liza, would you like to blast us?
I would love to. Hi, everyone. I'm Liza Amlani, and I'm the principal and co-founder of Retail Strategy Group and the Merchant Life. I was a merchant for about 22 years and then shifted into this world of merchandising and product creation strategy. And what I do is I help brands and retailers increase profitability and organizational effectiveness across merchandising, product creation, and go-to-market strategy.
I'm Carl Boutet, a retail strategist, marketing educator, and global jet setter these days, being back in planes and speaking in different parts of the world. So excited to be back here as well with you and the team, Gary. Thanks for having me.
I'm Jeff Roberts. I'm a management consultant by birth, South London by the grace of God. So I work on a whole host of things. I presently lead the Futures and Foresights practice for Jump Innovation here in London.
Hi, I'm Roslyn Griner. I'm a seasoned marketer, having worked in the retail world. Most currently now I'm consulting, and I'm a TikToker on the side.
Oh, excellent. We'll have to explore that one day. I'm Gary Newbury. I'm a strategic advisor and delivery executive focused on the rapid transformation of disrupted supply chain performance across end-to-end retail supply chains and the last mile. So thanks everybody for those quick introductions to help everybody orientate themselves who's listening in. I'm going to set off with our departure point today. A few weeks back, I noted a report in the press, and it was the Ottawa Citizen, of all great tombs of retail insights. And it concerned the Canadian apparel retailer Roots, who were reported as using a strategy of pack and hold on seasonless products. So it wasn't fashion items, it was seasonless, basics, classics. The brand, along with many others, including Walmart and Target earlier this year, more recently Nike and Gap, have found themselves with an imbalance between consumer demand and an appropriate level of inventory. I have a couple of points I'd like to explore with our experts today. Firstly, I'd like to explore the current status of organisational joins between market insights, demand planning, and supply chain execution, and perhaps if we have time, I'm sure we will, to consider what other factors may be in play of either a one-off or more systemic nature that retailers really should consider for resolution as they continue to accelerate their digital transformation for 2023 and beyond. So, Carl, would you like to kick us off with your thoughts?
Well, in terms of being for or against the pack and hold, I think my opinion would have been very different exactly a year ago, where we were in very different circumstances, where stock levels were at the opposite end of the spectrum. So a year ago, I would have said it was a horrible idea, because I think you just needed to move whatever you had to the people ready to pay for it right now. Today, obviously, with the fact that this is the opposite problem where there's way too much stock, then I don't think there's that much of an opportunity cost of taking that approach and hoping that the customer comes through in the end and completes the transaction. That said, I think the bigger point here is, how do we better plan? It's a hot topic right now. I know it's some stuff I mentioned in introduction, marketing educator, but I do a lot of work in a couple of universities, and universities tend to like to do data science. And this is something that our data scientists are more and more asked to try to better understand. What we thought of as 3 years ago edge cases are now becoming more and more common. How do we predict the unpredictable and help better forecast demand that's going to translate to product on shelves at the right time, at the right place, at the right moment? The largest corporations obviously are really concerned about that and have been tasking a lot of our researchers. That's where we need to go. We need to get better predicting the unpredictable.
It's such an interesting thing, because having come from the retail world of large legacy retailers like Reitmans, demand planning was always based on a historical, looking sort of to the past to predict the future. A year ago, when we came off the pandemic and demand was like all pent up, there was tons of demand and everybody went back to the stores and bought tons, and people assumed that that trend would continue, and then it kind of started to pit out. I think we have to look at the economic factors that are obviously impacting demand right now, but there's some longer term, I think, consumer factors that are going to change the demand for apparel. The rise of pre-loved, thrifted, secondhand clothing is rising at an exponential rate, and that is going to impact demand for new goods. So I think we have to take that into consideration. And I also think that we need to start planning our windows, obviously based off of CRM and data, but maybe shorter windows, and also basically doing some market research about what's your intent in the next 3 months. What are you going to buy? What do you need to buy? And right now, people are really starting to look and buy other things other than clothing. So I don't know that whether or not packing and holding is good. And it also depends on the health of the company. I've worked for some, DTC companies that are living hand to mouth in terms of cash flow. Can they afford to hold the goods is the question. And so the answer, as Jeff always loves to say, is it depends.
I think I would jump in on that, because I think Roslyn makes a great point, which is fundamentally, it really does depend. But I think really, and I'm vocationally obliged to say this, it's an element of a lack of foresight, right? So the idea is that we've taken a very narrow view of what we think demand looks like. So we tend to forecast, as Roslyn rightly notes, tends to be historical, and then we take a very consumer-centric view of it. And what I think the last couple of years have shown, if anything, which is that you need to bring in political, you need to bring in obviously wider economic considerations, but I think political is going to become more substantial if you just think about what the US has been doing, the sort of brewing Cold War there. I think there's a whole host of things that we need to start bringing in and thinking more wider context around how these things take shape. Because I think when you come back to pack and hold, when we started talking about this, it immediately touched a nerve for me. Like, I've spent my entire career trying to avoid ever being at the mercy of the finance function. And so I think pack and hold really brings you to the mercy of finance, because at that point you've got to deal with, can we afford to keep this? And then when you obviously have a gigantic line sitting on the budget that says either I've got to pay to hold this, or I've had to pay for the investment, etc. So then questions immediately start getting asked around what that looks like. So I think the remedy for me personally of avoiding ever being at the mercy of finance has been to try to push more of a foresight's view of the world, take a wider contextual view of what seems to be happening, change the way you're doing demand forecasting, bring some actual imagination to it. Data, absolutely useful, have to have it. But some imagination involved with this could really help us see a bit further. So thinking around the what ifs, bringing actual interaction to play into this, not thinking it's a linear input-output model, but how do these things fold back onto themselves? How do they become other things? So I think it absolutely does depend, but I think there's certainly tools at our disposal that we could do this much more effectively than we're presently doing.
I'd say there has been a lot of discussion around pack and hold and excess, and I think getting to the root of the problem is how retailers and brands are going to market today. And the fact is, the calendar, the concept to market calendar, the GTM calendar hasn't really changed much, except for maybe it's gotten longer. So that means that we are so far away from market that we actually can't predict what the customer is actually looking for, right product, right time, right place. And predictive analytics and assortment planning tools and merchandising tools are at the disposal of the Targets and Walmarts of the world and many other retailers. The challenge is human intervention, and the people are actually the barriers, I would say. And, you know, speaking to market leaders quite recently about this exact challenge that they're having is that when folks are not trusting the tech, and that's a huge problem today, especially as brands are starting to incorporate and leverage insights, other digital transformation tools during product creation. The fact is that if the people doing the work are not trusting the technology and they're intercepting the decisions that the technology is helping them make, then there's a fundamental problem outside of pack and hold and excess.
I think you make a number of excellent points across all of you, but particularly some of the things that Liza has alluded to. I've been watching her own blog, whatever, on Merchant Life, and I suggest everybody signs up to read it. Some of the basic points she makes in that blog are quite astounding, that I have to read them, and she's having to write them as to where we are with merchandising, demand planning, whichever term you want to do it. Now, just before we leap off into much wider discussions, the whole idea of pack and hold is we've placed orders, they've been transported to us often from the Far East, they're coming to our distribution network, we've held them there, we've looked at rate of sales and all the other metrics that we use to push them out to stores. Stores may or may not have had a good time of pushing them out into the customer's hands, but we've ended up with this excess, and now we can't actually bring in other lines, because these, either whether or not they're seasonal or fashion items, we're now having to take them back off the shelf, put them in the box and put them, I guess, back in the warehouse or some other facility. So there's a massive piece of overconsumption. And the other point I'd make on this is, and Lisa's been, I wouldn't say a victim of this argument I make about a redesign of a supply network, which relies on us organising our stuff. I use that term euphemistically, that if we can't translate what's happening in the marketplace, and it isn't just the sales data, it is other primary research. If the data isn't reflecting what we need to understand, Jeff made the point about imagination. If we can't add in something else about helping us to see where those consumers are drifting off to, and find our supply chain is able to respond to that switch, it's very hard for us to think about collaboration across our supply network to enable the very things that I talk about and often have pin drop moments all over the place, until we get our stuff organized between market insights. What is the market telling us? What do they need us to do? How do we buy it? How do we secure that? How do we develop products within that? And then how does the supply chain bring it just in time, literally just in time? Now, I was on a podcast with Oliver Banks and we were talking about agility. And I said, we should be able to respond to the demand. All the forecasts are about pushing, and we need to start getting the customer to pull stuff through our network. We can't achieve that if we're not joined up on these basic components. So maybe we can explore why we don't join up on these basic components, because we could be really good at marketing insights, we could be super good at demand planning, and brilliant, if I was involved, in supply chain execution. However, something else is going on here.
Gary, I would love to pipe in here, because as a former merchant of 20-something years, I'll tell you that I speak to brands every day, and I'll tell you that a lot of things haven't changed. So the way that we plan assortments, we go to market, the way that we think about technology and leveraging art and science and all the things that, you know, Carl, I know that you teach, the fact is it's not happening today. And the challenge with that is we are not changing the ways that we are working. Op models are built the same way. We're using the same hierarchies. Skill sets are not being utilized. Teams are not being trained and upskilled on things like digital product creation or leveraging insights. Brands are bringing in teams of insights and centers of excellence of insights, but there are no formalized moments within the concept to market calendar that these insights can actually be leveraged to drive decision-making across product creation and assortment planning. This is I talk about this all day long. You know this, Gary, too. But the fact is, speaking to market leaders today, not a lot has changed. I'm very passionate about this.
There's so much pressure on public companies to have sales lifts, sales performance, sales targets, and they're done almost irrespectively of the real consumer demand. It was very interesting as I lived through a moment where we brought our CRM team to basically partner with the demand planning team. And when they saw the reality that we moved basically one piece of clothing per week per store of like this item that they were buying 20-fold of, with the thought that, of course, if we build it, they will come. You can't do that anymore. This build it, they will come. When you look at those retailers that used to pile it high, thinking if it's there, it's desirable. I think scarcity now is much more desirable than the whole piling it high. But you're right, there is this, I have a sales target. If I don't hit that sales target, then I'm not making my investors happy. So they kind of go with this tunnel vision of like, in order to hit that sales target, I need to have these goods. But then the consumer is just not cooperating to actually come to buy those goods.
There's fundamentally a coordination problem, right? So I think Gary points to this. And so the issue is that, and this is an inevitability of any organization, right? By the time you organize a team, that team develops an identity, it has a set of interests, it has a desire to do things in a certain way, and that it automatically brings an in-group, out-group division between whatever groups there are in the business. And so, I mean, it keeps people like me and thousands of other management consultants in business annually, to come in and nod and smile and say, yes, of course, this can be solved. But the reality of the matter is that what you have to deal with is it's about finding opportunities to act and then creating those opportunities to act to where people bring in, they suppress certain parts of what they have to do. So that is the insights team will come in and just spout insights incessantly. And the demand planning team doesn't come in and go, actually, yes, we just need to plug that in over here and it spits out. It's about finding the right things. And this is where, I say this in very broad abstract terms as though it's easily solved. It's not, right? But the whole point is you have to create the opportunity to act. And I think what that means is it tends to show up in either a governance fora, right? And so this tends to be one of the big problems you see in retailers in particular, but you see across all organizations, where there'll be monthly, quarterly, annually cadences where you come through, you get the relevant teams in a room. Normally, ideally, it's some nice hotel somewhere, you sit around, you all chat through whatever the inputs and outputs are going to be of a thing, and then you move on. And it's the tricky thing around how do you manage the coordination on two fronts, I think. One, which is how do you build enough slack, to your point, Gary, to where you can respond when respond is demanded. So how do you actually put enough slack in the system to where it's not so tight that any variation to it collapses? And secondly, how do you provide things that get the routine to just run as routine? And I think those are things that are more easily said than actually executed. But the coordination problem, I think, is fundamentally that, right? Is that you have a whole bunch of stuff. The vast majority of things that flow through the organization are just standard, right? They just happen. And so demand planning is possible because most things don't really move that much. And so the problem is that oftentimes you do get variation. And I think that it's incapable of managing that. I have a broken record here. I have to be, it's my job, but it all comes back to foresight, right? If you got the right teams together more effectively to think about what ifs and scenario planned around what ifs, and then actually pulled together the relevant data, imagination, whatever around those what ifs, then you're in a much better position to be able to respond more effectively to it. To my mind, it should have been on everyone's radar that there was a possibility that demand could have dried up after 2 years of lockdown. It should have been a scenario, at least one of. We would have hoped against it, but it should have been on the.
And Jeff, I'm sure that it was, and I actually love everything you just said, and I'm like sitting here nodding. What I will say is that many brands do not strategize speed to market. And if it takes over a year, and in some cases longer, to get to market, to create product, also to buy into assortments if you're a multi-brand retailer, they're not leaving enough room and they're open to buy in season to react to shifts in shopping trends and what's happening in the world. But the fact is that if they don't have the open to buy, they actually don't even know where to go get the product in season because they don't spend time in that space. It's really about, again, shifting ways of working, but having that flexibility in season is a beautiful thing that we can preach to the choir, but the fact is it's not happening.
I wonder how much of this is also caused by the disconnect between the brands or manufacturers and the retailers to the consumer. There's some trends we're starting to see where finally there's more data sharing and collaboration than when, I think we'll probably come back to Nike a couple of times, but there was a big announcement maybe 2 weeks ago that Nike has a new partnership in the UK where they're data sharing with, I think it's Sports Direct, if I'm not mistaken. And they did the same thing last year with Dick's Sporting Good in the US. Because I think they just need more visibility. I think the brands have been sort of blind to the retailers' visibility and just basically building the shipping based on the quarterly forecasts that are far from real time. So I'm hoping that this trend, it's a complex one. It's one that requires a lot of trust, and I'd be really interested to see the agreements that are signed behind the data sharing and making sure that the brand is not, especially a brand like Nike that has its own direct. And we saw this week their announcement of building 200 new stores, going more and more so. So the trust that these mega retailers are saying, hey, we have no other choice. The only way we're going to hopefully build the relationships with our manufacturing brand partners is to share our data from at the first level, not wait quarterly to give them our forecast. So I'm wondering if that's part of the solution now. To think that everybody has the capabilities of doing that is going to be a big ask. But there is, definitely what Liza was just saying about, we're still stuck in many old paradigms, yet some of them are still very good. Open to buy, I'd be curious to see how many are really even still leveraging that. I'm working with some of my clients, just going back to Jim Roy. Gross margin return on investment seems to be something that's been lost along the way as well, where we could say, can we do better planning and just returning to some of those basics at the same time? So it's kind of happening at both ends, focusing on some of the basics that we've lost track of because we become too dependent maybe on the forecasting. At the other end, saying how can we become more transparent around the data sharing and making sure that everybody can get better and together. I'm sure Nike's in better position to see globally what's going on. And they also need to be more transparent with their clients and saying about their supply chain issues, because God knows, especially in Asia, they have their fair share. So that's my 2 cents.
I think, Carl, also it depends on the size of the company. In terms of Nike, they can probably control their manufacturing process more vertically, where they can flex demand up and down, versus smaller companies that don't control their supply chain, that don't hold, say, the raw materials in goods, they are holding finished goods. So I think that's flexibility that a lot of smaller companies don't have in order to be able to flex to the demand needs. So I think it really and you see these problems happening at larger companies where, they miss the boat. Imagine the situations of these smaller brands that are faced with these problems and they don't have the flexibility as much.
Yeah, I think that's a really interesting point, because I think what you both said really resonates with where my head's been the last few days, which is I'm wondering if what we're seeing actually is just a problem of scale, right? So if you think about, there used to be, it's the old saying, it takes a village to raise a child. Well, it takes an entire ecosystem to get a product on the shelf, right? So the idea is that we used to have different information brokers and different information intermediaries when we ran smaller organizations, right? You had wholesalers, and wholesalers had a really good, obviously they still exist, but they were a great information broker between what's happening on the retail front end, what's happening on the suppliers in the back end. And in many ways, they were able to pull through the slack because they had the warehouse space to hold it. And they were also to manage the information flows between the retailer, to give a different view of demand, and the manufacturer around what things would look like. And I'm wondering, now that we've gone to greater levels of consolidation and much larger global organizations. So Nike, I know, we'll stick with it because it's a great example, right? Their commitment to all the DTC work and their commitment to all the stores they're opening, effectively, they're starting to absorb more and more of what used to be enabling infrastructure around the retail environment, or eliding what used to be enabling infrastructure. So I'm really wondering if what we're seeing here is a problem that scale's created. If it's a problem that exists because of size. When we lived in an environment of smaller retailers, smaller organizations, that meant that there were more information intermediaries. I'm taking a punt, but that's where my head is then for the past week or so.
You might be onto something in the sense of, as in my departure point, I mentioned Walmart, Target, Nike, and the Gap. We're talking about large scale operations, but similarly, wouldn't it be about right to say that maybe because of their scale, they've got stronger people in the market insights department to better inform demand planning, and hopefully they've got some good supply chain people to push it through the network. But the evidence suggests otherwise, doesn't it? It is a scale problem, but insofar as you can imagine Walmart saying, I'm renting that boat, you're going to put your stuff on that boat and get it to me. What happened at the front end of that business? Say, we don't need them. Not saying that they should just cancel the orders, but that seems to be the other alternative to pack and hold is cancel orders. At all levels on that continuum, it's I'm the retailer, I win here, the suppliers lose ultimately, or I lose somewhere along the way as a retailer, but ultimately the supplier loses because they don't potentially get more orders placed on them. So there's something still around how we understand the market, even if it is large scale or smaller scale, and how do we respond to that with somehow shorter lead times. Liza was talking about the product development. I'm much more interested in, from a supply chain point of view, I place an order, I get the stuff. How quickly does it happen? And is it just because we're fixated with cost still, even after 2.5 years of this cost structure or this apparatus of just-in-time retail supply chains driven by cost as being the imperative without really a sense of risk? Even 2.5 years into this, we're still focused on, well, it still works, doesn't it? Kind of. We're not looking at new models, new ways of doing things. And that's in the supply chain. Lisa's talking about merchandise, and I suspect between the three of you, you'll be talking about how can we improve our ability to understand our customers more clearly. So there's gaping holes. And that's assuming that if we can fix those, we can align them. And from an organizational point of view, who gets a bonus for this? Who gets a bonus for, how do we bring those bonuses and those incentive schemes to actually make people inside the organization work together towards literally a common goal, that we're all in it together. It doesn't matter which department we're in, we're focused on that, which gives us a platform to work with our suppliers in a different way.
I want to rewind a bit because I think this pandemic has sort of shifted time on us. So let's go back to the beginning of the pandemic. I'm bringing the sort of 3 stages. So beginning of the pandemic, retailers were canceling POs. Spring 2020, hundreds of $1 million POs were just being slashed, and they're telling their Chinese or their manufacturers, sorry, we're not going to be good for this. So you better hold on to it. A couple of months later, a boat goes sideways in the Suez, and we're all freaked out about just in time and how that doesn't work, because we need to think about how we can get more resilient supply chains and not just be dependent on this over optimization. And now we're talking about we have too much darn stuff on the shelves. So, I mean, it's crazy if you just think of these 3 stages. We were saying just before, we need more stuff in our warehouses just because we want to be more resilient. Now we have more stuff in our warehouses and we're freaking out. So I'm sort of at a loss. I think there's market whims in this here too, but just thinking of those 3 stages that have happened in 2 years, basically, how we're still sort of our heads spinning or still trying to figure out where to go. So I'm not solving anything by making these statements. I'm just putting it out there saying we've gone from these, where our pendulum's been swinging back and forth like crazy, and we still haven't really decided on what we want to land.
Do you still think that there's a demand to have more local production, so to give themselves the agility to produce on demand? I worked for a company that had their manufacturing here in Montreal. I mean, there's costs associated with it, but there's the benefits that you can control your demand planning, because it's like, it literally was just in time production. There's an agility that, the closer your supply chain, we've seen all the issues in Asia, and, it's not we all went to Asia because it was so cost effective, right? And now it's not as cost effective. They've become much more expensive. So people are saying, where do I produce my goods? There's still this thought process of, especially now, like, how much can I raise my price? What's that threshold where the consumer just says, no, I don't want it. I don't want to buy it at that price. So there's a lot of questions right now to say, where do I produce? How do I have that just in time? There's a lot of pre-selling of goods, so you can calculate your demand and say, can you wait 3 months while I get it produced? I am not sure what the answer is, but I do think those questions are being asked.
I think some of it is rooted in the quality of our financial control systems. They allowed certain things to be done, certain structures to be developed without any sense of risk. And the risk actually turned into issues in around March 2020, and they just carried on manifesting themselves, and our financial systems didn't change. They didn't change in their response to that in terms of restructuring how they think about cost, because we think it's just about the invoices. Actually, it's all about the risks around what set of assets, what apparatus we actually use to create value. I think that's been fundamentally, I would say, prized open. To Carl's point, I'm saying because of our financial control systems do not reflect risk. Carl was reflecting the spinning of heads because they don't reflect risk correctly or give weight to them somehow. We run around like headless chickens. 1 minute we're cancelling orders, next minute we're struggling to get it in, and we're seeing these costs escalating. That's just a natural economic effect, and now we've got too much. So somewhere in that pandemic, we said to be resilient, we need more stock. And we'll run out and, right, let's get more stock. Rather than, actually, do we need to reconfigure, retool our, for instance, our supply chain network? Do we need to do it differently? We've got this window. We don't know when this is all going to, work through. Our experience has been disruption after disruption after disruption. Is this actually, and I would argue, the new normal started in March 2020. Everything was on the table to change, but we just carried on doing what we knew because our heads have been spinning. Fundamentally, our systems of how we recognize things haven't actually been challenged for hundreds of years.
I think the answer to me seems is that we've tried to respond. There's a great deal of inertia. Let's start with this. There's a great deal of inertia in the way things were, right? And it makes it really hard to move them. It took us 40 years to get to a model to where you could manufacture in China and have it show up in Canada within a reasonable amount of time at a lower cost overall. It took 40 years of deliberate policy and then a hell of a lot of money of moving things and then creating the trade environment in which that could take place, et cetera. But before that, as Roslyn rightly points out, there was a much more local, and there still is in many instances, but a much more local environment, which led to different sort of information asymmetries that we're dealing with now. Because I think, a lot of stuff that we talked about already was around information degradation. When I was in house, I worked in head office, and we used to joke that anytime we got a number, it was like Kobe beef because it had been massaged up every level at the time it made it to us, that it was in no way reflective of reality by the time we saw it. And so I think that a lot of what we're seeing is that over the past 40 years, we have structured a system that has allowed us to operate in a way that produced unbelievable plenty. Unimaginable amounts of wealth that lifted millions out of poverty. It was good overall, right? But what we're seeing now is that we're probably moving into an environment where we're moving against that. So again, I keep coming back to, I'm looking at stuff the U.S. Treasury has been doing around enforcement mechanisms, anything denominated in dollars, the sort of semiconductor stuff that's going on. I think we're going to move into a more, say, from a trade perspective, multipolar world than one that we have experienced in the last 40 years. And I think what that means is that you really need to rethink, as painful and as horrible and as much dead weight cost as there's going to be associated with it, how you do business. And I think the idea is that it is going to change. I don't think it's going to be overnight. It took us 40 years to get here, but I think there's going to be a fundamental change to it. I think everything that we're talking about is an effort to continue to do things the same way that we had structured them to work in an environment where it really didn't work like that anymore. And then what we see is a bit like central banks raising interest rates to dam inflation, is that we see the same idea. You got a really blunt tool and you're going to look at it and you're just going to hammer the hell out of whatever you got because you got a hammer and that's it. And I think when we see things like, oh dear, a ship's going in the Suez, right, well, order more stuff. And it's because it's an immediate response without thinking about the cascade of what happens off the back of that. I think it's all well and good for us to say this. I think the likelihood of it dramatically changing in the near future is very unlikely. There's just too much inertia behind it. I think there will be a number of companies who will look at this and see an opportunity. But I think what we're going to continue to see, and I'm not really a betting man, but if I were to bet, I would say that what we're going to continue to see is a whole bunch of shocks for probably the next 18 to 36 months. Because it's going to be action, reaction. Oh God, that's cascaded back into something I didn't want to happen. And so I think there's going to be a lot of that happening while we, again, spend an inordinate amount of time and effort to retool towards something that meets the actual environment in which we're operating.
Isn't it great to be a Monday morning quarterback? It's easy. It's easy for us to sit here and we've all been in the seats. We've all had the roles, right? Remember, just look how much we're smiling now. We wouldn't even be on this Zoom right now if we actually had a role where we had to deal with this shit day in, day out. The reality is we've given ourselves the privilege of stepping away from that and trying to see the forest for the trees. With Jeff's point, I think what's popping into my mind, and there's been more and more media talk about this, and I think even somebody at the Treasury brought this up, was Roslyn, you're talking about nearshoring, the phenomenon of bringing production closer. And I'm part of a provincial initiative here where they're trying desperately to do this, and it's very complicated, but that's for another Zoom call. I think we need to reconsider what nearshoring and friendshoring is going to bring, and the differences that that's going to provoke in the way that we go about trying to solve some of these problems, especially as Jeff was pointing out earlier, in the geopolitical climates, and that maybe we don't want to put Asia all in the same basket. Vietnam and China might be looked at very differently in the next couple of years. I'm seeing the nearshoring phenomenon. The governments have a lot to gain from that, and we'll be putting a lot of effort into that, but we're still a long way from that. Just that reality of being able to bring back production locally it has a lot more complexity to it than just a good political will to try to create more local jobs, for instance. It's going to be a lot more complicated than that, obviously.
I'll just add a little bit to that. With the brands we've been talking to and some of the ones that I work with, nearshoring is definitely part of the discussion. And the challenge is that the skill sets and the capabilities don't exist domestically or near, like close by, right? And that's an investment for the brand. If you're Nike, sure, you can make a bit of that investment. And what brands could start to do is think about, as they're creating product, working on prototypes domestically may be the answer. So if you're a Nike on campus, maybe creating some materials that are new, developing them in-house, using 3D printing is an option, and that would save some time and effort in production. But the fact is that a lot of brands have already invested in factory partners, in mills in Asia, and it's very difficult to pull away from that. So what I would say to that is, partner differently, invest in those brands in technology that will help you move faster, or things like digital tools so that you're able to approve goods more quickly. So I think that there's a lot of ways that brands could work differently, get faster to market, and not rely on overseas production for all of their production, but maybe part of their production.
I also think that we have to have retailers change their mind, thought process, like if I don't see the sample, you don't get the order kind of thing. Well, right now, digitally, you can create digital samples that look so real, and especially as we're going into the metaverse, Carl, and you can actually see a 3D model of that sample on a person. I think we're going to get to a point where we don't need the sewn sample to make the decision about to buy. But what I thought was very interesting when I worked at SureTex and talking to the fact that there is no skill set anymore to be sewers here domestically, they actually opened up a university at SureTex to teach immigrants how to sew so that they would be a potential pool of labor that they could use to continue manufacturing locally. So I do think there's a lot of thought process going into that. And again, the whole immigration process about whether or not we allow people, especially in the United States, where it's quite contentious and political, but that's the labor force that want to do some of this work that, domestically people don't want to do.
Just on that note of physical sampling, I have so much to say, which I'll try and keep it very short. But the mentality of the industry is still very much no sample, no sale. And that mentality is not only within the brand throughout the merchandising and product creation team, but it's also on the wholesale side. As you know, if you're a multi-brand retailer, you're going into a vendor appointment. If there's no physical sample, you're not buying into that product. And that's a mentality that needs to shift. That's a behavior shift. That's something that I talk about a lot, because there are, as you said, Roslyn, there's a lot more tools out there that brands can use. And I know that a lot of brands are using them. I was talking to Away recently, and we were talking about how leveraging things like 3D printed sampling and digital twins are giving them the ability to approve prototypes a lot more quickly, but also that they're very accurate. And I think that's where there's a myth with physical sampling, that if you don't touch and feel the product, it's never going to sell. You're putting your name and your money on this item, and if it doesn't have a great sell-through and high gross margin, it's your name on the line, it's you on the line. So that's where we need to kind of shift that behavior. And a lot of that can be broken down by breaking down those silos. If we start having cross-functional teams train together, upskill together, understand the benefits of digital sampling versus physical sampling, and spending that time and effort on physical sampling of product that is complex and innovative and different, instead of things like basics, which we know happens every day.
We have our answer: 3D printing. Voila. Let's just put printers in every store and we can just manufacture right on site. Be fabulous, wouldn't it?
I would love that. But I mean, at least from a materials perspective, I mean, you don't need to recreate a zipper pull every single season. And we know that is exactly what is happening today.
It's crazy.
To wrap this up, is there any final thoughts?
I would say that pack and hold may be the answer for some brands and retailers. If they have the space and the capacity and obviously the money, because it does cost money, to hold product that's seasonless, I would say go for it. If they're marking it down and that product was either overbought or they bought into the wrong product, that's something that they need to go back to the drawing board for. Implementing and leveraging things like consumer insights throughout the product creation and merchandising process, leveraging predictive analytics and assortment planning tools. These are things that will really change the game for brands and retailers, not only getting them faster to market, but buying into the right quantities, the right product at the right time and in the right channel.
And I think even what the definition of seasonless product, I mean, outside of a white t-shirt or even black pants, black pants right now, the trend is towards loose sort of dress pants silhouette. Down the runway, they were showing a lot of skinny pants. So you could be sitting on a lot of like wide leg pants. And then tomorrow, what is considered the essential pant is a skinny black pant. So even that definition, I mean, there's a danger there because, what's seasonless? There's hardly anything today that is totally seasonless.
My takeaway on this would be is that if you're going to use pack and hold, use it as a temporary stopgap to put some slack in your system and then actually rethink things more broadly. Use it as an opportunity to do all the planning you never say you have time to do. So it should buy you a little bit of time to do it. But I think in terms of a long-term solution, I think it's not necessarily viable. Because again, my mantra, never come under the watchful eye of finance. And so this is a good way of doing it.
I think it's all be said. I mean, the idea that pack and hold, maybe one of the approaches is to really rethink about our channels and just think about more resilience and not being over dependent on one way of doing things. I think that's one of the lessons too, is making sure we have a diversity of ways of moving product that doesn't have us hold anything in one particular place for one particular channel, that we can rely on several to move the goods as needed. So maybe we've again become a little over optimized in some ways.
My final thought would be, when I see any version of pack and hold, it's a signal. It's a signal that somebody needs to pay attention to why this has happened and what we could do better next season, next quarter, whatever it might be. But don't think that's the end game. That's how it was being expressed in the Ottawa Citizen, was like they've developed this and it's the end game. Actually, it's the start of a big improvement program for the organisation, if they see it as that. And I'm wondering if those organisations, big or small, mid-size, seeing this as a way of managing through this imbalance and just thinking the imbalance it's just a timing issue, rather than this is actually a fundamental breakdown in our connection between the different processes that we need to look at again, rescale, reorganize, reconfigure. But we mustn't just say we're there, we've arrived, finally, no more joining the back. Is it, how much longer? No, this is not the place that you want to end up in. So thank you ever so much for tuning in, and thanks for the excellent insights and input from Jeff, Roslyn, Liza and Carl. Thanks everybody for joining and listening. Cheers, bye-bye. Thank you for listening today. I hope the information has been valuable for you and your organisation. You can connect with me via my website, RetailAID.ca, go to the contact page, or via LinkedIn and connect with me there. Please feel free to follow the experts on this podcast for more insights and to join in the conversation. I look forward to collaborating with you and playing an active part with your supply chain and business's transformation as you are inspired to think big, Be bold, scale, adapt, and win.